Good morning, everyone, and welcome to Daily Trader. I'm Kevin Hincks. Today, we've got a macro minute for you and two practice trades. We're going to look at two pretty high-profile names here. Apple post their earnings report, and then Qualcomm, which comes out with earnings tomorrow after the bell. And if you look at the chart, it's been pretty beat up lately on some news that we'll cover in a moment. First, let's get to our macro minute. Well, it's election day, and things are going to get a little dicey in the next 24 to 72 hours. We won't know when we know. VIX is down a bit today. You know, we got some pretty good financial data just around 9 o'clock Chicago time. We got the ISM Services Index. We're coming in at 56. That is stronger than expected. Remember, anything over 50 is expansionary. Anything below 50 is contraction. And this name, along with the PMI or the manufacturing that have been struggling lately, but the services part, very strong at a 56 reading. Now, let's get to our trades for today, because this is going to be, an interesting day for the markets in general from a macro perspective and for individual names, as you know. So Apple, after their earnings a couple days ago, how has this stock traded? Well, if you look at the chart, it's down. It's down 1% in the last month. In the last week, it's down 2.9%. So this stock, as you can see there, coming off its recent highs, and many people think that it should be coming off their recent highs. A 36 PE where this is trading is pretty rich, pretty highly valued for Apple's overall long-term valuation. But some people will say that Apple's new AI and Apple Intelligence and the super cycle that is on the horizon means that Apple should trade at a higher valuation. I don't always believe that, but we'll see how it plays out. And our practice money trade will give you the opportunity to have Apple go down and still be profitable, yet still profit on the upside. This is a short put vertical in Apple. And as you can see, we go out to the November 15th expiration. And we look at something we like to talk about a lot on the Schwab Network and on Fast Market and on these shows, and that is a high probability trade that collects daily theta and is risk defined. And so what we did in Apple, we went out to November 15th, which is 10 days from now, only a week and a half, and we sold the 215 put, selling the put that is currently $8 below the market. Then against that, we bought the 205 put. So we're selling a 10-point put vertical in Apple. That means, think about this. That means if in the next 10 trading days, right, out to November 15, 10 days, not 10 trading days, 10 full days. If Apple stays right here, you're profitable. If Apple goes up, obviously you're profitable. If Apple goes down but doesn't get to $215, you're profitable. The risk on this trade is below $215. Adding in the credit that you took in this case, you see we have it at a $1.25 credit. So that means the break even on this trade is $213.75. That's where the stock breaks even. So anything above that at expiration and you're profitable. Now the risk on a trade like this always outweighs the credit that you take in on a short put vertical because it's a high probability trade. The risk is the difference between the $10 strikes, 215 to 205, and the credit taken in $1.25. So that's $8.75 in risk. But if you look at the November 15th expiration, look at the 215 puts, there's a 78% chance that at expiration, at November 15th expiration, the probability of that short put finishing out of the money is 78%. Think about that in terms of overall probabilities of a trade being successful. Now, in a one-off event, can Apple go down below 215? Of course it can. But if you're playing a big sample size of trades, playing the probabilities on the right side puts you in an advantage. Each individual story, though, Apple could come out with bad news. The numbers could miss. The valuations could be thought of as high. Some of the numbers for iPhone 16 and the supercycle could come in weak. There's a lot of reasons. That said, in a worst case scenario, you are risk defined on this trade to the width of the strikes minus the credit. Okay, so there's a downside bullish short put vertical in Apple. Now let's get to our second trade. That is Qualcomm. Now Qualcomm has earnings after the bell tomorrow on Wednesday. And it's pretty interesting because this stock, because of a licensing dispute with ARM Holdings, has sold off quite hard. It had a high in June of $230, now trading $166. Now, this is a company that has a lot of patents and is heavily involved in the automotive industry. Now, they've got new Snapdragon Cockpit Elite. That's a cool name. Snapdragon Ride Elite. These are new chips, AI-focused chips for the automotive industry. They are involved in infotainment. They're involved in assisted and autonomous driving. So Qualcomm is going to be a key player in autonomous driving, full self-driving, and all the things having automotive. And that's just one of the chips that they do. They just came out, they just had a Snapdragon Summit event where they introduced these new chips, and AI-powered versions of automotive-focused chips is what Qualcomm is focusing on right now, and that could be, the future of a lot of these things. But they do need resolution on the licensing dispute with ARM Holdings, and they may have to pay higher fees. There's a dispute on the different royalty rules that they're trying to work out, and that's got Qualcomm stock down. Now, here's the thing. They will settle this eventually, and then that removal of uncertainty could cause Qualcomm stock to rally. That's some of the things you're planning for, and as well as their earnings coming out tomorrow. So let's talk about our Qualcomm trade, and that is going, if you look at the expected move for Qualcomm, it is $12.87. Pretty big, pretty substantial move, almost coming up about 8 or 9% in the stock. So Qualcomm trading $166. Add that $12. And so what we did, we went out and looked at the 1 week, buying November 15th, 177.5 call, selling November 8th, 177.5 call. That's current trading right around, it's actually rallied a bit. It was 75 cents. Now it's over 80 cents. So Qualcomm has already rallied a bit today. Yeah, it's up about 0.9% already today. So this is a 1 week calendar spread taking advantage of the higher implied volatility in the November 8th expiration of 111, and you're selling the high implied volatility, buying the November 15th implied volatility that's 71. So you're buying, almost 40 points lower in implied volatility than you're selling. That dispersion between the two levels of implied volatility give you a slight advantage on this trade. Now, you still need the stock to move upward, right? This is still a bullish play targeting the 177.5 strike. So this is a trade in Qualcomm that is collecting theta. Again, the risk is only what you pay for it. So if you pay 80 cents on this, that is the risk on this trade, is only the debit paid. The risk on the short Apple put vertical, a little bit different, right? It's a difference. It's the difference between the strikes and the credit taken in. The risk is the debit paid on this trade, and it's also collecting theta, but it's a pretty neutral delta in terms of that because of the volatility dispersion. But this takes advantage of any good news. And if you look at a chart on Qualcomm, the stock has been pretty beaten up over the last several months. If I look at a 6-month chart in Qualcomm right now, down 8%. So it's come down significantly off of its recent highs. So to summarize, we have a short put vertical, taking advantage of some elevated levels of implied volatility and the ability to be profitable on 3 of 4 scenarios. And then for the earnings play tomorrow in Qualcomm, we've got a 1 week call calendar taking advantage of the dispersions in implied volatility. All right, it's election day. Get ready for some volatility overnight. Be watching the election results come in and have your Thinkorswim platform open, watching the futures overnight to see any moves. I think they'll be volatile. Watch the currencies, watch the bond market, watch the overall stock futures. It should be a fun one. That's all for Daily Trader today. I'm Kevin Hincks. Have a great day, everyone. We'll see you tomorrow.